So according to economists at the University of California, Berkeley, the top 10% of income earners took more than 50% of all income in 2012. Now, why is that such an amazing fact, and why do I want to point this out? It's because it's the highest amount ever recorded since they started recording it in 1917. Now, of course, you know what happened around the area of 1917, around that time period, right?
You're just mad at rich people.
Oh, is that it? Yeah, that's it. Or it could be the fact that they crashed the entire fucking economy twice. Could be, maybe. I don't know. Maybe I'm just mad at rich people for just the fact that they can eat steak, 4 times a day if they wanted to. Yeah, who knows? So last year, income for the top 1% increased by nearly 20%, while the bottom 99% saw only a 1% gain. Now that sucks. As a member of the 99%, I can say that I feel pretty shafted right now.
So people making $100 million went up to $120 million.
The rich got
while
richer.
People making $10,000 went to like $10,100.
You got it. Your math is good there.
Your math is good.
Trickle down.
Basically, all that translates into we're getting screwed. Now, some more numbers for you. From 2009 to 2012, incomes for the top 1% grew by 31.4%. So remember, the 20% was just for last year. And between those 3 years, 2009 to 2012, it grew by 31.4%. Now, how did the 99% fare in that time period, right? Well, the incomes of the 99% grew only by 0.4% within those 3 years. That's pretty shitty.
And they should feel good about that.
They should feel lucky to have a job.
Right, they're making more money now, so.
Yeah, I mean, if you're making like 20 grand a year, then I mean, you got like $80 more. So,
Of course, and that is obviously it's wiped out by inflation for one, rising commodity prices like I don't know, food, gas, other stuff that actually might be required to live.
Well, it might be messed up a little bit when you start bringing things like facts and details into it, But if you could avoid talking about those, then it would make perfect sense.
Well, of course, you can't. You're right. You can't bring facts into a factual discussion. Can't have it. Not allowed. Can't do it. So there was a quote from the study, from the University of Berkeley study, that said, quote, overall, these results suggest that the Great Recession has only depressed top income shares temporarily. And I want to point this out. In 2010, there was no growth for the top 1%. To be fair. And there was also no growth for the bottom 99%. But they continued. It will not undo any of the dramatic increase in the top income shares that has taken place since the 1970s. So there's that. It also goes on to say that the policy changes that took place coming out of the Great Recession, financial regulation and tax increases for the top 1%, and that was, of course, signed this year, are not negligible. They are modest, relative to the policy changes that took place coming out of the Great Depression. Therefore, it seems unlikely that U.S. income concentration will fall much in the coming years. So basically, the rich are consolidating all of their money. They're getting richer and richer and richer, and the poor are, they're getting poorer. The middle class is shrinking, and the poor are getting poorer.
They're getting richer and richer and richer, and they're creating a lot of jobs, right?
No.
Oh,
you. Jobs? You talking about jobs? Come on, man.
That's what the money's about, creating. They're job creators.
Yeah, but they're not job creators. And that's the thing. People that are in the middle class are job creators because they actually go out and buy shit. These people, these people that are really, really wealthy, they're wealthy corporations, they continue to want more and more and more tax cuts and less regulation. But they're already stupidly fucking rich. Why do they need more of that money? So, okay, so to be fair, like I said, the top 1% lost 36% of their wealth during the crash of 2008. However, they gained most of it back, or I'm sorry, they gained it all back, and then some. From 2007 to 2009, average real income per family, however, declined by 17.4% and has not recovered, but also shrunk.
Well, this was actually, and that's actually something that a point I was going to make here about that, and that is right now we're seeing this, or they keep talking about how the market is recovering. The market is recovering.
The market has recovered, yes.
Right, and they keep talking about this and saying it as if it's something positive for everybody. But the only people who had money in the market are the top 10%.
You think middle class people?
They're the ones who are reaping any reward from this positive market, and that's just the ridiculous part about it.
You think
right, absolutely.
The people has any investments in Wall Street? Middle class people invest in Wall Street. Now people say, oh, but 401ks, pensions. Yeah, but that's a very small amount. You know that corporations are actively getting rid of pensions and retirement plans because it costs them money.
But Jeff, it's trickle-down economics. The better the rich do, the better we do, because their wealth trickles down onto us.
No, there's been something that's been trickling down in the middle class and the working poor and the poor, but it ain't wealth.
I don't know that I would say that companies are, only to be fair, I don't know that it would be fair to say that companies are getting rid of pension plans and whatnot, because having been in the 401k industry for a long time, sales of new plans and transferring plans, sales of new plans is actually pretty good for the last 5 years.
All right, well, hey,
a lot of smaller companies are picking them up.
Well, okay, so you bring up a great point. Smaller companies. I don't know if this is really the trend, but I would say smaller companies are a little bit more invested in their employees. But when you get big corporations like Walmart and McDonald's and so on and so forth,
their employees are expendable.
Exactly.
They're easily replaceable.
Exactly.
I mean, that was the trend when the fast food chains really started to take off way back in the 30s and 40s, and when they realized that they could train a bunch of people to do the same menial task over and over again, they were expendable, and they could get more people all the time, so they could fire easily, rehire easily, no big deal. Their employees suddenly meant nothing to them, and they could pay them a very low wage to do the menial work that they were trained to do.
Right, and I think that's a really good point, and we're seeing that obviously today, and
that's also why you can't go into a Walmart and actually ask a Walmart employee anything and have them actually know anything. Also, they know nothing.
And that's by design. I mean, okay, we're not saying that people that work at Walmart are stupid, for one.
They just don't require any training. That's all.
Right, and so we just want to make that distinction because we're not hating on the employees. I mean, the employees, I actually see the people that work at Walmart as, they're hardworking people that are getting exploited, okay?
Mm-hmm.
And they're being shown, I mean, it's so bad. They pay their employees so little.
Well, they're being treated like diesel fuel.
Welfare. They have to get on food stamps. They have to get on Medicaid. That's a taxpayer-funded program.